Welcome to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Toronto. I'm joined by John Kaiser, founder of Kaiser Research Online. John, it's great to see you again.
Vanessa, it's great to be back here with you.
Now, John, let's talk a little bit about the venture exchange. It's been on kind of a free fall for the last month. What do you see happening there?
Well, generally every year we get some sort of September rally where after the summer doldrums, people get excited, they pick up the best stocks. We got that type of January rally in the first quarter of this year, and it looked like we had a selective resource sector bull market where the better companies were picking up. Unfortunately, it was tracking the rebound in gold from 1200. They worked very hard to get it to close out 2013 below 1200. They failed. It ran to almost 1400 amid all the Ukraine crisis. And 2 weeks after PDAC, the PDAC curse kicked in, gold started to go down, everything keeled over. It's been trying to hang in. And then when the September rally just didn't materialize, as gold plunged through 1300 and it's now I think 1213 or something like that, that basically just caused this big sagging whoosh. Oh no, this year is going to be a disaster.
So where's the venture headed?
I think if they can push gold below 1180, which is the low that it hit last year, then all hell will break loose. Then there will be a momentum pylon in gold, and it could touch as low as $1,000.
So you're saying it needs to go down so it can go up?
Well, I think we either need to survive this, see this as the base, and continue with our sort of 1200, 1400 range bound for the next couple of years while we see how the American economy does without quantitative easing and with higher interest rates. But if it breaks down below that, that totally destroys the gold bug narrative. All this stuff about hyperinflation and currency debasement and all this goes out the window. A rebounding US dollar, rebounding US economy, all the reasons for owning gold disappear.
Do you think the US economy is rebounding?
No, I think the economy is an artificial response to the quantitative easing, which has exacerbated the rising inequality. There has been no wage increases. The middle class does not see a rosy future. The economy is not growing organically. Businesses are using their capital to buy back their own shares, not investing in the future. This psychology needs to change. And I'm of the view that if this changes positively, that's good for gold, but it's not going to change overnight. I'm horrified by the possibility that we will see a 10 to 15% correction in the big markets, which should be a healthy reset in preparation for an economy where Main Street participates, not just the elite. But it could get overdone, and that's not good for gold either. Then we have a deflationary environment, and in either case, it seems, the juniors are set for a final wave of capitulation where people just give up in disgust and sell everything out. And I'm really unhappy about it because I'm not sitting on an awful lot of dry powder to take advantage of this bottom fishing opportunity that is going to open up by the end of this year.
So we get a lot of questions from our viewers. Jeff Clark over at Kaiser Research wanted to ask you, based on the GFMS releasing this all-in industry average cost of production of $1,350, how sustainable is the gold price at these levels right now?
Well, $1,350 would be the cost of bringing new ounces into production. And you look at the example of Virginia Gold's Eleanor gold deposit, which Goldcorp bought for $750 million in 2006. Before there was even a resource estimate, this was arguably the best gold discovery in Canada in the past decade. 19 million tons of 6.5 gram gold. Their updated feasibility study shows that at $1,300 gold, it has a 3% internal rate of return and a near negative net present value. So this is brutal. The cost inflation in the mining sector in the last 5 years has far outstripped general inflation. And this means that even if they do knock gold down, below $1,200 towards $1,000, it is going to be a short-term problem because insofar as the world wants more gold, they're not going to get it from new mines coming on stream down the road. And the world will want more gold if we get back into a proper global economic recovery and new wealth starts parking some of itself into gold as a hedge on long-term uncertainty.
Right. Okay. Now, what do you think could spark a recovery in the venture markets?
In the short term, everybody's concerned, well, why is gold going down? Obviously, it doesn't make sense what the gold bugs talk about. Inflation isn't going to help the juniors because the costs are going to go right up with the price of gold, so it's just a wash. China has been buying its own gold production. It last reported 1,000 tons about five years ago.
Okay.
It has since then probably mined 1,500 tons. China has also been a net buyer, importer of physical gold, supposedly being bought by the Chinese people, who may be buying some of it, but I think a lot of it is flowing into state-owned entities. China is ramping up its ownership. If they were to disclose tomorrow that they own 3,000 plus tons, pushing them ahead of the Germans into second spot in terms of central bank gold holdings, I think the world would notice and say, you know, I think the Chinese know what we're doing. We're going to stop selling our gold and we're going to join them in buying. But they have no interest in doing this. They are so happy that gold is supposedly being manipulated down because they're just soaking it up.
Right, absolutely.
And the other thing would be a discovery. We need a junior exploration discovery that works with the lousy gold price of whatever, 1,200, whatever it is going to be in the next little while. And that works spectacularly when we get gold trending back towards that $2,000 level, which nothing found today is going to be in production before 2020.
What kind of discovery are you talking about? What size of a discovery?
Oh, you want it to be a world-class discovery. You want it to be in an area where it's possible to repeat the discovery so that the glass goes half filled and other juniors get money to say, oh, we can do that too. We can apply this new technology or whatever. That sort of stuff.
Inspires people to go out and do them. Okay, follow suit. Now, you've pointed out that the venture is basically tracking the gold price. Is that still the case today?
Yes, I mean, companies like the EMC Scandium one that I follow, it has nothing whatsoever to do with gold. It is a standalone story that even if the global economy retrenches 10%, this is an emerging metal that's the aluminum industry is going to gobble up. And yet it sags down along with everything else when gold goes down. It makes no sense. It's this, it's a fetish that the audience that follows the juniors is so hooked on the short-term trend in gold.
So what could allow the venture to disconnect from the gold price?
Well, a gold discovery that's really good. Remember in the 90s when we had all these discoveries, and even in the 80s, gold did nothing. It sort of bobbled around 400 plus or minus $50 and so on. Nobody cared what it was doing. They were just interested. You're going to find a 5 million ounce gold deposit at a grade that's absolutely way higher in terms of value than what it's going to cost to mine it.
Well, John, it was great having you on the show again as usual. Thank you for being here.
Thank you, Vanessa.